Hello, my beautiful friends. This is Shreen Purewal bringing you the latest real estate update and today's update on the mortgage rate hike announcement from the Bank of Canada. What happened today? What we thought would have been a 0.75% increase on prime, which is the Bank of Canada rate, was actually a whole full 1% rate hike. Okay, so I'm going to read up here some points of today's announcement. So what prime was 1.5% is now 2.5%. Inflation in the US last month was 9%. Now, what does all this numbers mean? There's a bit of a panic happening at the central bank level because what they're saying is we can't afford to have money lose value. That's what inflation essentially means. So, and what's driving a lot of this money losing value is all this money in circulation. Let's do what we like to call quantitative now tightening, take money out of circulation to cool things down a bit because it's out of control. Unemployment rate in Canada was at all-time lows. Wages were on the rise. So when you're forcing everything to rise now, all of a sudden, it's not bringing the market back into balance, which inflation you always want to keep. And this is what they said today is their target for inflation should be around 2%, not 7, 5, 6%. It needs to be under control. So now that's what they're working on, is to get this all under control. And so they're talking about this, and what they're hoping out of all of this is that there will be a soft landing. Now, forgive me for saying this, but when you've printed more money in the last 2 years than you have in the last 10 years in the US, a soft landing, I'm not sure will happen, because to take that amount of money out of circulation with just 1%, good luck is what I have to say. We will need whatever landing is needed to get that money back into control, that amount of money being printed back in line. What's happening already is a lot of companies have started layoffs because they're like, no matter what you say, Bank of Canada, my cost of business is on the rise. This economy is going into a recession. It even says here, Bank of Canada announcement, that for 2022, the GDP forecast was 3.5%. It's now 1.75% for 2023. They've significantly almost halved that forecast for growth, for our growth as an economy. So now you're expecting everything to be soft landing when companies are going to start layoffs. We're trying to take trillions of dollars out of the economy. All I'm saying is I'm not trying to be pessimistic. I'm always positive, and I always like to be as realistic as possible. But what I'm going to say is, for me, because I don't know what's going on in the economy, my safest place to put my money is in residential. Because with residential, I know everyone needs a roof over their head and everyone has to pay their rent. And for the most part in Victoria, they've got secure income because a lot of them are government employees, and it's the capital city of British Columbia. So I feel comfortable investing here. And I feel comfortable that for the right person and whatnot, residential in the right location is a safest bet because it's generating income. The condo market is cooled down already. It's at a good, stable entry point to get into. The housing market is still on the decline, and especially now with that 1% on there, when it comes up to renewals, let's see what happens on people's mortgage renewals. Now, having said that though, remember, they were qualified at higher rates. So people were not just given mortgages in Canada like in the US they had done in the past. Here, they qualifying people for higher rates to see if they can afford it. So now I want to read you a few points today from today's announcement. So the governor said that the bank's goal is to get inflation back to its 2% target with a soft landing for the economy, which I told you. To accomplish that, we are increasing our policy rate quickly. So they're like, what, instead of doing 0.75, let's do 1%, to prevent high inflation from becoming entrenched. So they don't want it to like become a norm. Let's immediately shut this this increase going on. We expect interest rates will need to rise further. So they're saying this is not it. There'll be another one. Most likely, the next one will come in September's announcement. We expect it will need to rise further to cool demand and bring inflation back to target. And by front loading our interest rates, so by doing these interest rate hikes now up front, we're trying to avoid the need to increase interest rates even further down the line. This move came the same day the U.S. inflation data recorded a 9.1% increase in its highest level since 1981. So you see, they're like, whoa, we got to get this under control. U.S. is 9%. We got to get this back online. What does our Royal Bank of Canada economist say? He says data flow over the past month, including another upside surprise on inflation, a worrying increase in inflation expectations, a further decline in the already record low unemployment rate, and accelerating wage growth all suggest monetary policy needs to get away from stimulative territory as soon as possible. So they're like, we're done trying to get this economy pumping and pump it with money and whatnot. We need to move away from that because it's getting into danger zone with inflation. He says here, tougher medicine will be needed to get inflation under control. And we look for the policy rate to rise to as restrictive of 3.25% by October. So he's saying further interest rate increases are needed. So stay tuned. I'm trying to see if there's anything else that they're forecasting. They're having forecasts by GDP for 2023. So they're all saying, even CMHC announced, we're expecting now to go into a recession. Let me see what the announcement is there. It says the latest in mortgage news, CMHC sees change of a recession if Bank of Canada policy rate hits 3.5. So, and it did. So as Bank of Canada continues to hike interest rates, the country's housing agency sees the chance of a recession growing the higher rates go. The CMHC put out a report this week suggesting the likelihood of a 2-quarter recession should the Bank of Canada take its override to 3.5%, which CMHC considered a high interest rate scenario. So in this scenario, the Bank of Canada hikes more aggressively and increases its policy rate to 3.5 in early 2023 before gradually converging back to the neutral 2.5. So right now we're at 2.5. They're saying if there's another 1% increase to where we are at right now, expect a recession big time. These 2 quarters register marginal negative growth, signifying a mild recession in the high interest rate scenario. So they do some modeling and whatnot. So I'm going to put this aside and just talk back to all of you to say what's happening is that we're trying to bring things back in balance. To put it in simple terms, you've got supply, you've got demand, and you've got inflation, which is messing this whole supply and demand up. You're trying to take inflation as much as out of the picture so you can deal with the true value of supply and demand. We do have a supply issue, but we also have an inflation issue. So the inflation trying to be brought under control is artificially creating more supply on the market. But when the market gets back into balance, inflation gets back into balance, we will see there is a housing shortage still, and we will see these prices pick back up again. So whenever that is, that soft landing and whatnot, we still need to address this housing supply issue, guys. And mark my words, supply, demand, inflation. Inflation's messing things up, but that doesn't take away from the fact that we still have a supply issue. Inflation is working in favor of the buyers right now. It's going to cool things down. But once things cool down, inflation's brought it back into control. Expect it to pick back right up because we still don't have enough homes on this island. And mark my words, you can ask any builder here, whatnot. Rent. Look at, when you want to know about supply issue, go look at the rental market here. Go look at the rental market here in Victoria. We have a supply issue here for sure. So anyways, these are my 2 cents on the British Columbia market here. If you have any questions, subscribe to my channel. Message me below. And the reason why I say subscribe is that you don't miss out on the latest information. I'm going to do some really cool tips for condos when you buy a condo and knowing how the parking lot is registered on title. A lot of people think they own the parking lot that comes with their condo unit. They may not. So I want to do a video of that to help you guys out. And these are important things I don't want you guys to miss. And stay in touch. Love you guys. Any questions, reach out to me. Cheers and take care. Bye, everyone.